Hi, and welcome to Two CPAs and the Mic, the podcast where we talk tax, finance, and all things related to business. Whether you're a business owner, working professional, or someone who wants to start a career in accounting, this is the podcast for you. Hosted by CCK Strategies partners Jeff Frable and Sara, we dive into relevant business and tax matters with working professionals to make these topics less intimidating, relatable, and dare we say fun? Let's get down to business.
Welcome to another episode of Two CPAs and the Mic. We are excited that you're joining us today. We are covering relevant business and tax topics, but we're doing it by applying straight talk and practical information, but without all the jargon and stuffiness that normally goes with being a CPA. Today's episode is going to be a fun one. We're talking about 401k and employee benefit plan audits. Maze, doesn't that just get you so excited?
It gets me so jazzed.
I mean, I got goosebumps already.
Yes. Actually, I kind of do because, knowing who our guest is today.
And looking at the outline.
Yes.
So here's the deal. If you're listening and you're a business owner, you definitely want to stay on this podcast because if you have a 401k plan in your business, you need to know when these audits are needed, when they need to be done, and you don't want to get in trouble with the upper-ups of the IRS, ERISA, and all those people. So
those penalties are steep.
They are steep. So you definitely want to be listening for yourself or maybe for your colleagues, your buddies who own businesses.
That's right.
If you are a professional in the business world, in the space, accounting, tax, stay on. You might want to hear some things and make sure it lines up with your knowledge and understanding. You may learn a thing or two. If you're not in the space and you're not a business owner and you listen to us because you just love our stories and our content, stay on. I think we're going to have fun. You definitely want to stay on for the very end. We're going to have some fun with the would you rather.
Yes.
But we're going to have a good time. We're going to keep this. Our promise to you, our listeners, has always been that we are not going to get into the weeds. We are not going to get extremely technical. But honestly, we feel like this is something we see that goes unnoticed. And so we have a resident expert with us to talk about today. But before we do that, Maze, it's banter time.
Yes.
Friendly banter time.
Well, we have to acknowledge that KP is not here again today.
Yeah. Now, for our listeners, in all honesty, we recorded yesterday. So it's not like, she's been gone 3 weeks.
3 weeks, yes.
This was yesterday. So she's still out. Why?
She's still out. She's watching her girls play in the lacrosse championship. And then her oldest, I think, had her graduation.
Graduated today, which we talked about yesterday, which if you listened last week.
Right.
So
you'll get it. You'll get it. Yes.
If you've been listening to us and following, you get it. So
So we had talked about our topics yesterday, but I have a fun one for you today. So I'm throwing it at you.
Throw it at me.
So let's, just to kind of get our juices flowing, what's a high from this week, a low from this week, and one thing that has made you question society?
Wow. A high this week and a low this week.
Mm-hmm.
Okay. Yesterday was a high.
Oh, okay.
Yes, it was. It was, I think I told you, I was on level 10 for about 4 hours. I was able to, our goal is to be the best and most responsive CPA firm.
That's right.
And I got a call from a center of influence, a referral source saying, hey, I've got a client that needs this help. And he called me
5:30, right?
Well, he called me Tuesday night.
Yeah.
And after hours, and we got on the call yesterday with his client, and I said
1:30.
At 1:30,
less than 24
hours.
Mm-hmm.
And I said to him, and this was an audit situation, and I said, look, if the only thing we do is take care of you and make you look like a rock star in front of your client, that's all I want to do because I care about you and we care about you. So that was probably my high, but it was very intense. And then I did a presentation that I think I mentioned yesterday, which was about the chamber presentation. So that was really cool.
That's cool.
My low was coming. Okay. Too much information here. Came home from this long vacation and our dog had oopied several times upstairs.
Oh, no.
So it was just really weird.
Is it like a runny poo-poo?
No, it wasn't. It's not like he was sick. It's like the pet sitter wasn't
paying attention.
I don't know. It's just really weird. Anyway, that was the low because my wife got extremely irritated.
Yeah.
But the high was the next day. I surprised her by getting all the carpets cleaned.
Nice.
So that was a high-low.
That's a good husband moment.
And then you said the society thing?
Yeah. What's something that's made you question society? Anything this week?
No, it's
Like
just
some weirdo stuff.
Just
normal.
anytime I turn on the news, I just get,
yes. Or weird social media.
Yeah. So
post.
what about you?
A high this week was like having my kids home. We're still waiting on Wyatt.
He's still driving.
But we're getting there. A low, you're going to find this funny. I've realized how old I'm getting. And I'm like, I get exhausted really fast, especially with this new newborn around.
Yeah. You're not 20 years old anymore.
No. So that's very humbling. So
maybe you should go back and
low.
listen to last week's, which was yesterday's episode with Chris King, and get some counseling about the aging thing. Right?
Yeah, I need some aging counseling. Yes.
That was, then your society, did you?
Well, I haven't. I have really, just ridiculous. People just need to think and not post ridiculousness.
It goes back to what we were talking about yesterday, which was last week. The concept, we just need to love each other.
Yes.
And just have some grace.
Yes.
With people.
And realize that one segment in a lifetime or in a post or one segment that you watch is not the whole picture and the whole content.
Absolutely.
So it just,
I tell you what, we
could
spend the whole rest of our time together just, belly aching and stuff.
And dissecting all that.
I was going to ask you about The Wiz.
Oh,
because I go see it tonight.
Oh, you're going to see it tonight? Yes. Definitely worth it. Ease on Down the Road is so good. But I love how they transition between, because it's the Wizard of Oz and you're transitioning between meeting the Scarecrow and the Tin Man and the Lion and going into Emerald City. And all of their transitions were amazing. The vocals were great. Outstanding.
I can't wait to see it tonight.
And speaking of, did you already sign up for next season?
I did.
Good.
Yeah. Right. I can't give up. I'm 10 rows back center.
Yeah.
And I can't give that. I can't give
But it's a good season.
Yeah, it is.
The highlight, Phantom of the Opera.
I thought it was Spamalot. That's why.
I banged the table again. Clarence is going to get on to me.
All right. Well, we could stay here and talk all day long, but we need to get into some of the technical stuff. And Sarah, go ahead, Sarah.
We have today with us Jeremy Smith. He is brand new to CCK. He's been here just shy of 6 months. And we're so excited that he's here. He is a senior manager in our assurance department. And honestly, we've only crossed paths just a couple times because he's down in our Frisco office. And so I'm just going to let him take it away and give us Jeremy, just welcome to the podcast and just tell us a little bit about yourself and your background.
Thank you for having me. I'm actually getting ready to start my 23rd employee benefit plan audit season. So whenever you made a comment about not feeling as young as you are, that I'm right there with you. But I am a little jealous I didn't get in on that conversation earlier, the 3 questions. So before we dive in, I'd like to give you my 3 questions.
He's got personality.
Yes.
All right, go for it.
So first off, I spent the earlier part of this week at the Employee Benefit Plan Audit Conference with the AICPA. And so
where was that?
That was in beautiful Orlando, Florida.
Nice.
And so I got work during the day and went over to Disney World in the evenings. So it's not awesome.
Jeremy, let's let the listeners in on the secret. I mean, you didn't just go over, oh, hey, I'll go to Disney World. That sounds like a great idea because I've never been before. Right?
I've been a few times.
He's been. I can honestly say that as big a fan as I am, and as much as I've been, Jeremy may be
Have you
more.
Beat? Wow.
He has a Disney shirt on today.
Yes.
Yes, I do. Yeah. Actually, fun fact, I told my wife this morning that I was doing a podcast today, and she immediately sat up and said, "And you're wearing that?" I told her, it's okay. There's no video. It's okay.
Right.
Yeah.
All audio.
I could go a couple different ways with that.
Yep. No,
so
but
also, hi, Jeremy.
So the high is, working a day, Disney at 9. It was a great week.
So good.
And the low is that my favorite ride was offline the entire time I was there.
Oh,
no Big Thunder Mountain.
Oh,
I thought they started it back up, Jeremy.
Yeah, but it busted again. I asked about it, and apparently there was a fire on the tracks. Maybe they didn't I don't think they got it quite right the first time. So
that would have made the ride more exciting if you have to go through a fireball.
So, Jeremy, I got a question for you. And I know our assurance division leader, Haley Legg, when she listens to this, is going to go, get to the good stuff. But this is the good stuff. This is what's keeping our listeners on. Jeremy, I heard this rumor from a cast member once that if you look at the goat a certain way and you're in the back of the train, that it increases the G-forces. Do you know about this thing?
I have never heard about that one.
Okay. Well, I think the cast member was just
conspiracy theory.
Uh-huh.
Well, I'm sorry, Big Thunder was down.
Yep, Big Thunder was down. And I'll say what makes me lose faith in society is the comment section. I think you can lower your blood pressure by just not reading the comment section on anything ever again.
Valid.
Our listeners don't get to give comments back, do they?
Yeah, we have an email.
Oh, boy.
I'm going to plug it right now. Podcast@cckcpa.com.
But
Please give us a comment.
We're doing so great, Jeremy, that we just don't get comments. So that's the way we're looking at it.
Yeah, that's exactly right.
The worst comment I've ever received on one of my presentations is some guy wrote in there that he wished he was watching my presentation on YouTube so he could turn it to 1.5 speed.
Okay.
Rude.
It's like, oh, that was a rough one.
Yes.
All right. Well, let's get to the real stuff.
Yeah. So you said earlier, this is your 23rd year. So kind of elaborate a little bit on that you've been doing this for that, but you haven't only been doing employee benefit plan audits.
Correct. I started off my career at one of the large national firms, and that's all I did. They specialized everybody in different fields, and I was an employee benefit plan audit specialist. I eventually grew to hate myself and quit that job. And so now I have a little more balance, but it's a very important field. And so I still enjoy doing it. And for those of you who may not know, a 401k plan, of course, it's a vehicle for retirement savings. You take a portion of your salary, either a fixed amount or a percentage, and you invest it tax deferred into a fund, and it earns earnings over the course of your career so that you have that available to you whenever you retire. And normally there's a employer match or something like that involved as well. And these audits that we're talking about are audits required by IRS and the Department of Labor to protect those funds, to make sure that those plans are operating as they are intended and as the law allows. So that's what we're talking about whenever we're doing these 401k plans.
Right, because it's governance over making sure that, number one, that money is really in there, and that it was there, because there's limits on contribution amounts, correct? And so correct. You're looking at those as well.
Right. They're both. There's two folds. The purpose of these audits are to protect the people that are investing their money, because it's your money. These deferrals. I mean, it's like if you're not deferring it into that plan, then you could be out spending it at Disney World. And so those funds have to be protected. And also, the government is very, very keen to make sure these plans aren't abused. And so there are limits around contributions, but it's a twofold process. And it's not just for business owners out there, you're familiar with what a financial statement audit is. There's a financial statement audit component, and there's a compliance component. And the compliance component is where the protection of the employees comes in.
So, Jeremy, when you're talking, I mean, I think one of the reasons why this is so important and regulated, and correct me if I'm wrong, but in the tax world, we talk about agents. I think they're referred to as agency funds. In other words, when we as employers withhold payroll taxes, one of the ways that we can get into a lot of trouble really quickly and can't get out of it from penalties and things of that nature as easily is because we are withholding our employees' funds that are supposed to go to the government. And so if they get abused, if they get misused, the government agencies jump all over us. And this is the same type of thing, is you are withholding your employees' funds for their retirement. And if you don't get them where they're supposed to be, or withhold them the way they're supposed to be withheld, or have the documentation, that's a problem. Isn't that right?
That's correct. And not to be overly dramatic, but it's called the regulations refer to it as a fiduciary duty.
Right.
That if you're going to withhold that money, You have a duty to get it to that plan, and so that money can be invested as soon as possible on those employees' behalf. And that's one of the things that we actually test whenever we're doing our audit. Are you sending this money in timely? And the standard on it is kind of a moving target, because the standard is as soon as administratively feasible. And so sometimes that's 2 days, sometimes it's 5 days. It just depends on organization to organization. The key is to be consistent in how you do your operations.
Jeremy, for our listeners, could you just kind of take us at a very high level? Because we're referring to a 401k audit. We're also referring to an employee benefit plan audit. So I would say that a 401k plan is an employee benefit plan, but an employee benefit plan is not necessarily a 401k plan. And there was this, before 401k plans, we had defined benefit plans. So could you just kind of give a really high level timeline of what these different plans are?
Yeah, absolutely. And sorry if I got a little carried away with myself. I just get so excited about it whenever
I love it.
Start talking about this stuff. Now, employee benefit plans, it's a wide range. It's a term used by the Department of Labor. And I'd say at a high level, there's 2 types. You have qualified plans and you have unqualified plans. And unqualified plans tend to be the Wild West. A lot of your business owners might have unqualified plans. They're generally not tax deferred, and the regulation on those is very, very lax. And the presumption is that anybody who has one has kind of the wherewithal to monitor it. Whenever we're talking qualified plans, in the old days, before any of us, pension plans, defined benefit pension plans were what was out there. And 401ks came along later. And the reason they came along is that, quite frankly, businesses wanted to shift the risk. And whenever you have a defined benefit at a very high level, that means that there's a piece of paper that says, once you retire, after this many years, we're going to pay you this amount of money. So the employer has the obligation to provide that amount of money. Under a defined contribution plan, which a 401k plan is, the company only has to contribute what the paper says, and the investments are going to fall where they may. So you shift the investment risk from the company to the individual. That's kind of where we are today. And 401ks are the standard. Pension plans still exist, but they're very rare. They tend to be in unionized settings where it's part of a collective bargaining. And then there's some niche industries. They're still tax advantageous in certain non-profitable spaces, credit unions, that kind of thing. But by and large, those pension plans have gone away. If you still have one, they're solid gold. So please value it if you do. But for the most part, you see 401k plans with employer matches or what you see today.
So on that, you've mentioned that, that the IRS and the Department of Labor have these requirements. What's the difference? What is the IRS looking for versus what's the Department of Labor looking for?
So the IRS is very centered on the design of the plans. And because how the plan is designed and what the actual document that governs the plan that's where the tax implications are. Okay. And so IRS is very focused on, and not to get too technical, but it's called discrimination testing. They don't want the plan to be designed in a way that highly comped individuals receive a greater benefit from the plan than the rank and file guys. And so there's all these formulas, and I call it voodoo math personally, but they're involved in that side. Whenever we're talking about these actual audits and the day-to-day and kind of going through and what's required to be filed every year, you're only involved with the IRS if there's a problem. You're involved with the DOL, the Department of Labor. You have to file with them every year. And so they're more concerned about protecting the assets, protecting the plan, because the Department of Labor division that oversees this whole thing, his name's Marcus. I actually saw him yesterday, and he was wearing salmon-colored pants of all things.
Okay.
And he's a colorful guy.
Yes.
But
I would say you're a colorful guy with your shirt on.
Same. Well, what can you say?
Yes.
I will say I was the best dressed person at that conference, hands down. But they're the ones that are focused on that. The IRS is trying to drive revenue for the government. These guys are not. Their audits are not profit center or not revenue generating.
Right.
So, Jeremy, we probably have business owners that are maybe freaking out right now.
Yeah.
They're like, well, holy cow, I've got a 401k plan. I've got 10 employees. We've got a 401k plan, and I've never had one of these. Jeremy, walk us through, when are these audits? It's not everybody needs an audit type thing. So what are the general parameters of when someone might need an audit for their employee benefit plan?
There's a lot of nuance here. The law that requires these things was written in 1974, and it's changed since then. Before we got on here, I actually wanted to know how long this law was, and I asked Copilot how many words are in the law. It's called ERISA, Employee Income Retirement Security Act, and it couldn't do it. It estimated between 400 and 600,000 words, depending on what amendments and all this kind of stuff. So there's a lot of nuance. And what I like to tell people is that if you're around 100 accounts in your plan, you need to be talking to somebody. And normally, if you have a good service provider or a good third-party administrator, they're going to be cluing you in. But if you're sitting around, I got about 80 employees, I got another 10 people that are hanging around in the plan that used to work here, we need to have a conversation. And
so let's stop there, because you said 100 accounts, but you may only have 80 employees. Kind of walk us through, just a pause. What is an account versus an employee?
So if I'm an employee at CCK, and so I contribute to our plan. If I do something stupid and I get canned tomorrow, then I still have an account with CCK because I have not withdrawn my money from the plan. And so that means anybody who is actively contributing and anybody who has contributed who hasn't taken their money out. If there's 100 accounts in that plan, the rule of thumb is that's whenever you need to start worrying about an audit. And there's a lot of nuance, a lot of give and take. I don't want to get into a flow chart right here.
Yeah.
Right.
But that's whenever it's time to start having a conversation. So in your example, 10 employees, you're not going to have that. You're not going to have a problem. Yeah.
Unless you have a horrible turnover.
Yeah.
Good point.
Yeah.
It's never
and people that don't take their money when they go.
Right. And leave it. Yeah.
So Jeremy, I think we're going to kind of get into what goes into an audit, but let's just kind of jump to the end real quick and go and ask this question. When an audit is done, when an audit is required and an audit is done, does it simply just go to the client and they throw it into a file and say, I have this in case someone looks for it, or what do they do with it?
Nope, none of that. And so what happens is whenever we issue our audit, it's in PDF format, and anybody who has a 401k plan or administers a 401k plan is familiar with what's called a 5500 filing. It's an IRS form, and it has to be filed every year for any qualified plan, big or small. There's a large plan and a small plan. We don't really need to get into the difference between the two, but if you have to have an audit, you are a large plan. And so what typically will happen is that whoever files your 5500 for you, normally it's the third-party administrator that sets up, that runs your plan, the Fidelities, Principal, those kind of people of the world are going to file it for you. And you have to send it to them, and they will attach it. And you have to be careful because there's not like a system thing that will prevent you from attaching the wrong thing. It's just, here's my 5500, here's the attachment. I've seen companies submit the wrong audit. I've seen companies submit things that aren't even relevant. It's just like some scanned mail. Here's our audit, and it's just a PDF of a bunch of invoices.
Purposely,
accidentally.
Okay.
But the reason this matters is because you can search up all that stuff. Any qualified plan, there's a DOL website. You can search up any plan audit for the last 20 years.
Wow.
And so you kind of have to pay attention to it. A lot of times business owners will kind of skim past like some of the language in the footnotes and all that stuff, just, legal stuff, whatnot. But all that stuff's publicly available. So you want to pay attention to what's in those notes. One thing I have seen that you might get a kick out of, one time I had a provider contact me for a quote on a 401k audit. I was like, okay. The first thing I do is I go and I pull their recent filings. And I saw that this particular company, they had 3 different auditors in the last 3 years, and their most recent filing was late. And on top of the audit, they had included a letter that said the only reason that our audit is late is our idiot auditors wouldn't get the job done. And so I'm thinking,
Whoa.
I just don't need these people in my life. I'm going to decline to bid on this. But you can put whatever you want out there. And as long as the audit's there, you're in compliance, and the DOL will let it sit there.
Yeah.
So the reason I was kind of laughing about intentionally doing that, does the IRS, do they actually look to see that that's an audit? Do they actually look at it, or do they just kind of check the box? And I was thinking that maybe they just kind of checked the box, so they were kind of playing the system. But I'm assuming there is some sort of double check there that goes on by the IRS.
There is. Not to get too much in the weeds, but here's the high level of how it works. There's different rounds of checks. And so these things are due July 31st. They can be extended to October 15th automatically. And then on October 16th, they do the Department of Labor is the one who checks up on all this. The IRS only gets involved if there's a problem. The Department of Labor will run a query to see every 5,500 filing that does not have that attachment. And then you get a letter. And then, but if you have an attachment, a lot of times our clients that for whatever reason, the audit can't be finished, there's an operational issue, a correction that needs to be required, and the audit's not done, we'll have them attach a letter that says, we're still working through the process, we're in the process of correction. Not too much detail because all this stuff is publicly searchable, but to explain, we're still working on it. And that buys you a little bit of time. Then about a month or 2 after that, then you're going to start getting the letters, hey, you didn't attach the right thing. So there is a process.
And I don't want to go too far to the end here, but while we're on this subject, what happens if you don't? What kind of penalties are we talking about here?
They're stupid.
They're stupid.
Stupid, crazy, right?
Well, here's the deal. Because if you get a nasty letter or a little bit of hate mail from the Department of Labor, it's going to say something along the lines of the maximum statutory allowed, which is around $1,500 per day. But I have never in my career seen anything assessed near that. It's always a negotiated amount below that, but it can be, if you're just not engaging with them, and frankly, if you make them mad, they can really hammer you for some serious penalties.
Yeah, it's ridiculous.
All right.
Okay, so we've talked about the end and getting everything filed, but what kind of things are the most common issues that you see when it comes to pitfalls with clients, like gathering information and all that kind of stuff?
So 2 things. First thing is the timely filing. And I'll be honest with you, I do not like testing for this because it's subjective. And so whenever I'm testing for it, I'll say, okay, you submitted every contribution within 3 business days, except for this one, it took 10. What happened there? It's like, oh, Susie went on vacation. She did it whenever she got back. That's technically a late filing.
Oh.
And so you have to have those kind of conversations, and they're very awkward. The reason I also don't like it is as an auditor, I kind of pride myself in focusing on things that actually matter. In that kind of case, the correction for that is that you have to, because it's the way the Department of Labor considers that late contribution is that the company has borrowed money from the participants and they're owed interest. The problem is that if you're talking 7 days worth of interest on
$100,
or a lot of these contributions are $20, stuff like that. So everybody's owed like 14 cents each.
What a headache.
And so you have to pay somebody to calculate it. And so it's one of those deals where you're going to end up paying a service provider. Normally, it's not the auditors. It's not us milking the clients or anything. It's normally you pay those third-party administrators a couple grand to find out you owe $200.
Yeah.
Wow.
And then you have to file an excise tax on top of that. My advice is just make sure that whenever Susie goes on vacation, somebody else is going to send in the 401k contributions. It's that important. And they view it as a compliance thing. at these conferences, I've asked the DOL guys about it, and it's really not about the money. It's not about the excise taxes to them, because our federal government doesn't need your $200 in excise taxes. It's more about enforcing compliance and getting the money in and protecting the employees. So I get it, but it's always a very difficult conversation. The second most common problem you see is that the way most 401k plans are written is that we're going to take whatever percentage you save of your salary and defer it for you. So the good question is, what counts as salary? And so it's all based on what's set up in the payroll system. Is it your base earnings? Is it your W-2 earnings? Because your W-2 earnings includes non-cash stuff like group term life insurance, taxable use of a company vehicle. Are you going to be deferring on non-cash stuff? And it all depends on what's in the document. You have to follow the document. Wow. The number one thing that we see causing issues are bonuses, though, because a lot of people don't want any deferrals taken out of their bonuses. And if you don't exclude them from compensation, then you should be deferring on them. And the reason that matters is that if I get a $1,000 bonus and I'm deferring at 10%, and you don't withhold my bonus, or you don't withhold from my 401k from it, then I have not gotten my match that I should have gotten. Right. And so it doesn't sound like a lot for one person, but whenever you consider the entire company, it can be a very meaningful number.
And
I'm sorry, I got into the weeds.
You really need to get.
No, I know it. I kind of got choked up as well.
It sounds like you need a third-party administrator. Period.
You do. Just flat out.
Yeah,
period.
You don't want to be messing
doing
with this
that
on your own.
No.
Jeremy, when you are doing these audits, I have two questions for you. One's a piggyback. So what are the kind of the general things that you test for? And obviously there's a lot of things that you test for, but what are the biggies? And my second question is there any part of that auditing and that testing that's fun? And when the reason I say fun is,
Dare we say
fun? What came to mind is when I was doing bank audits and I get to look at loan files, there's some interesting stuff in those loan files. There's financial statements, but that's not the fun part. The fun part is seeing all the pictures of the property or sometimes the applications themselves and just a general understanding of who these people are. Sometimes you go, they're a big name in the community, and you get to look at this stuff. Is there any part of those audits that's kind of more fun than others to do?
Well, I kind of look at it a different way. I kind of view it as, maybe I'm kind of a stick in the mud, but for us, we take it seriously because it's, to be able to do these audits, you have complete access to payroll. You have to. There's no other way to do it. And so if you make a mistake and leave a payroll journal somewhere, or if it's unprotected or it's in the wrong file and in the upload, that's a huge deal. So there's not a whole lot that's fun there. But
so what Jeremy's saying is,
data security.
If you jack around when you're a staff auditor, you can still make partner.
Yes.
Yeah. As far as the main sections you're looking at the contributions. That's where we spend the majority of our time. You're also looking at the distributions out of the plan, people taking their money out of the plan. There's a number of ways you can take the money out. If you have a hardship, if you take a loan against your plan, if you're a certain age, you can take some money out. And of course, whenever you retire, we always look at that to make sure that it's authorized, that you're eligible, that the taxes are withheld right, all that kind of stuff. And then we also look at the investments as well. And without getting too deep into the weeds, depending on the level of audit is how deep you go on the investments. Okay. And there are different levels required from different plans. Oof. Now, the one thing that is kind of fun is sometimes I did think of something that's fun. Okay. Is one of the reasons that you can take money out of a plan is if you're no longer employed by the company. And some of those termination letters can be kind of entertaining.
Oh, I didn't. You get to look at all of that then.
Tea.
Yes. Mm-hmm. So you get to see, as part of your audit, you can see termination reasoning and all that kind of stuff?
Well, it just depends on how much they give you.
Oh, okay.
We have to see evidence that they're officially terminated. And sometimes it's just a letter that says your position has been eliminated effective whatever date. Sometimes they give you like a whole file and with all the details. So that can be kind of fun.
Scan those into our documents.
What I've enjoyed most about this part is our attempt to have too much fun. Jeremy kind of squashed us and said, we have to be serious. And I do appreciate that, because I think that is an overriding factor on everything we say on this podcast, that we do treat clients, we treat information with the utmost respect and confidentiality and all that. But Jeremy, thank you for bringing that back.
Oh, I didn't mean to be a buzzkill. I really
no, you're no buzzkill.
Love it.
So, but while we're having fun.
Oh, yes. Are you getting to the story?
Why don't you take it, Sarah?
Are you going to?
You asked, no, this is the
story time. Yeah. Okay. So have you ever uncovered any fraud in a 401k?
Yes, a couple of times.
Shut your mouth. A couple of times?
Yeah. And the reason that it's a little bit uncommon, and the Department of Labor will actually tell you this directly, that anybody who has enough power and influence in an organization and the desire to commit fraud, it's a whole lot easier just to do it on the company side. And then you're not messing around with your employees' money. And so actual fraud in an employee benefit plan is fairly rare. And I have seen it a couple times. The first time it was a smaller organization. It was about 120 employees, somewhere in that neighborhood. And so they didn't have just this giant accounting department with all kinds of redundancies and segregation of duties. They had one lady, let's call her Jenny. She was responsible for remitting the 401k payments, or 401k, that sending it over to Fidelity in this case.
Right.
And she would also send in the loan repayment, because you can borrow against your loan, your 401k plan, if you have some sort of financial hardship, that kind of thing. And you can either repay those through payroll deductions, or if you want to pay them off in bulk, you can do things like bring a check into the HR department and they'll send up the money, that kind of thing. Well, she was responsible for doing that. And so what she started doing was she would take out a 401k loan and then just kind of pay it off with the company's funds a couple months later.
What?
And she did that. She was doing that. And so how we found it is we just looked at the list of new 401k loans, because we were going to test a few. And so we just kind of asked the question, hey, why does Jenny have 6 401k loans during the year? And they're all paid off. What's going on here? And then I asked the question.
Did you ask
anything
Jenny?
Back from the client? What's that?
Did you ask Jenny?
I asked Jenny's boss.
Okay.
But Jenny's not going to tell me. And so radio silence from them for about a month. And then I had a call with it was a small bank, of the bank president and their attorney and their HR chief. It's like, okay, this is what we found. And how are we going to do about it? What are we going to do about it for the audit? And of course, the only thing the bank president said was, I didn't think she was that smart. But
I was going to say, that is a pretty smart.
It's pretty clever.
Smart.
Yeah.
Yes.
So that was one time.
Okay.
And another time, it was another situation where it was a small organization, just a little over 100 employees. And they had one guy who was responsible for payroll. Let's just call him Mark. And Mark was responsible for payroll. And unfortunately, it's kind of a sad story, but Mark actually got cancer. Mm-hmm. And he had a lot of, that's kind of how a lot of these fraud stories start. People have a legitimate need and they think that's the best way to address it. And so what he started doing was he was paying himself bonuses. And we talked earlier about how bonus compensation is something we always look at because companies get it wrong all the time. And whenever an auditor tells you that the sample is random, it never is. I'm telling you a secret now. It's always skewed. And in a 401k audit, we often intentionally pick the people that are involved in the process because they're the ones who can manipulate it.
Yeah.
And so
Smart.
We picked Mark, and then we're looking at Mark's payroll, and it's like, okay, why doesn't his 401k recalculate? Oh, he got all these bonuses. Okay. So why are you getting 2 bonuses a month? And so I had to go to Mark. In this case, Mark was the highest level guy I was dealing with. And it It's like, hey, Mark, I know it's awkward, but see all these bonuses here. Need to see something that shows they're authorized. And he didn't respond to my email. Couldn't get him on the phone for next couple of weeks. And then same sort of deal. Had a call with the owner and their attorney, and it's like, okay, what do we need to do?
Yeah.
And in that situation, the owner poor Mark, and the owner just outright told me, it's like, I would have given him the money if he'd asked, but anybody's going to steal from me, I can't have him here.
Right.
And so those are the kind of things you run into.
So, Jeremy, I think this is kind of important to point out. In the normal assurance world, meaning audits, if you read the engagement letter, if you read the audit opinion, it says that the purpose of the engagement is not to detect fraud, which is counterintuitive to what most people think about an audit. Is it the same way with an employee benefit plan audit? I'm assuming that it's similar language. In other words, if someone wants to know if there's fraud going on in their plan, they don't normally, they shouldn't do an audit because that's not designed for that purpose. Is that correct or is that incorrect?
Yeah, that's correct. And just at a very high level, the reason that these audits are not designed to detect fraud per se is that they would cost so much money to go into that level to find all the types of, it's a cost benefit thing. And the profession, the bankers, the users of financial statements have agreed on this level that's the reason that we don't audit that deeply. And it's the same sort of thing with these 401k plans. But if we find it, you bet we're going to tell you about it.
Absolutely. Yeah.
So I'm a business owner and I'm thinking I may need one of these things. What does the process kind of look like as far as timeline? How do you go in and request certain documents and the field work, what I would call the field work? So from signing of engagement letter to issuance of a report, how long does that generally take in a good situation?
Well,
depending on the size of the plan.
Right, exactly. There's a lot that goes into that. Normally, what ends up happening, if you've never been audited before, the way this process normally plays out is that anybody who has a 401k plan knows that you have to give your provider certain stuff at year end, census, payroll data, all that kind of stuff. And if you have a provider that's a good provider, they're going to tell you, hey, by the way, you've tripped over for an audit. You need to get an audit. That's typically where we see the first notification that you need one, the first outside notification, unless you're proactive or asking the question. And you'll normally find out about that in kind of the May timeframe. And the folks that get in trouble are the ones that just kind of ignore it until September or something. If you sign up in May, normally it's a lot of this information these days is coming directly from the service providers. And so it's a combination of getting information from that third-party administrator. They all have different schedules. If you're using a pretty good administrator, they're almost always going to be online. And the people at your organization that are going to be most impacted from terms of time commitment are honestly going to be the payroll folks. HR is involved, but beyond pulling some documents, a lot of times they're not really too involved. It's the payroll people that are going to be in the nitty-gritty because they're the ones who are going to be answering questions about pay codes. And no matter what, every time we pick an audit sample, there's always some guy who goes 2%, then 3%, then 4%, then 6%, then 12%, then 2%, all within 1 month. And so there's always, and then whenever that happens, you have to get more documentation from the payroll folks. So your payroll folks are the most active people. But to answer your question, I would say a normal process is at least a 6-week process.
Okay. So then if I'm a business owner and I'm thinking I may need one of these engagements, how do I go about choosing the right firm or service provider to do this? Who does these audits and how would I go about choosing the right one?
Well, what I would say is that you really want to ask questions about the people that are going to be working on your audit. Because this law that requires them, it's been around since the 70s. It's been tweaked here and there, but for the most part, if you've been doing this stuff for 20 years, there's not a lot that can happen that you haven't seen before. And so you want to be asking questions about what experience does the firm have? Who is going to be working on my account? What experience do they have? And making sure that you get good service. I would also advise a balanced firm, because there are firms out there that do nothing but 401k audits. But if you follow the logic of that, that means they're doing nothing but work during this one time of the year. So what kind of service are you going to get from that? And that's my advice.
Isn't there a quality program related to employee benefit plan? Softball question there.
Thank you for the help there. Yes, there is. It's called the Employee Benefit Plan Audit Quality Center. We accountants love our long titles and acronyms, but what those are firms that have made a commitment to having certain controls in place, certain level of training in place to make sure that their staff auditors are doing what they need to be doing to get these audits done quickly and as efficiently as possible. And our firm's a part of the Quality Center, and that's something you can search for online as well.
Yeah. I was
shameless plug.
Right?
I mean, we're putting on the podcast. Right. We can plug, right?
So you can have a independent CPA do your 401k plan audit. They don't have to be part of this center, or you could choose to have someone that goes through the additional rigorous qualification to be part of that center. That's basically the difference, right?
And these plans, they're separate legal entities, separate from the companies. So you don't have to have the same auditor that audits your company, audit your 401k plan. And if your company is not audited or not reviewed or anything, you're not tied to one specific auditor. These plans are separate entities that stand on their own.
All right. Nice. Maze, do you have anything else? I mean, I've really enjoyed this conversation.
Yes.
I say this with all love. I've enjoyed this more than I thought I would. I mean, we want to present the information, and it's not Jeremy. It's just the content and the information and the detail. And Jeremy, I think, has done a fabulous job.
So good, Jeremy.
Except when he got all choked up on
right.
part of it.
Well, it's emotional for me. I really care deeply about those contributions. Yeah.
But just breaking it down and treating it like, I mean, it is a big deal, but it's not a big deal if you have the right.
In layman's terms, for sure.
Yeah. All right, Jeremy, we have a special segment just for you as we wrap up. And I've done it myself just for you. So
yes.
We call it Would You Rather? Okay. Are you ready for this, Jeremy?
I'm excited. I want to hear.
Would you rather reconcile a client's payroll to the penny on the first try, or have lightning lane access that hits flawlessly all day with zero standby waits?
I'm going with the lightning lanes.
All right.
Love it.
Would you rather explain 401k eligibility rules during busy season, or explain to your group again why you have to optimize your park route like it's a tax projection?
Oh, that's a good one. Well, the problem is what you're asking is mutually exclusive from the earlier question, because everybody knows that if you're going to have optimal lightning lane usage, you're going to be zigzagging all over the place. So there's no clean route.
Okay.
So
now he's getting technical with his
okay.
knowledge.
But I do think that 401k eligibility rules are easier than Disney access.
Yeah, there you go. I love it. Would you rather survive a surprise IRS notice, or watch your carefully planned Disney itinerary implode because someone says, let's just wing it?
Oh, that would never happen when I raised my kids right.
Nice. Me too. I love that. This is a good one, Jeremy. Would you rather close out an audit with 0 review comments, or catch happily ever after fireworks with front row castle views, no crowds, no stakeout early?
You know, I think I'd rather finish out the audit.
Oh,
because I think the crowds are part of the fun.
Oh,
okay. Oh, how sweet. Okay. Would you rather spend 3 hours tracking down a $7 variance, or spend 3 hours in line for flight of passage because it's worth it, even though your soul disagrees?
Well, I'll go with I'd rather find the variance because that's in the air conditioning.
Well, I thought you were going to say I would never track down a $7 variance. So.
Well,
last one. It's immaterial, right?
Well, that's the thing, though, these compliance audits.
Yeah, go explain that. Yeah.
Okay, well, so at the session yesterday with a guy who runs the DOL department that oversees these things, the guy who wears the salmon-colored pants, he was asked, what is material on an employee's check? And his answer was, it depends on the circumstances. And he went on this long-winded thing about how 3 cents is always going to be immaterial. But he said $4 is always going to be material because if you add it up over the course of a year and then apply it to the entire plan. So the answer is between $4 and 3 cents, and I don't know where it is.
Well,
that's an auditor answer.
I purposely drafted that question to have that conversation.
Nice.
It sounds like there was some angst behind it. So I hope I didn't contribute to that.
No, that was perfect. Last one. Would you rather have a client who sends perfect organized PBCs prepared by client forms, or a Disney trip where every mobile order, Genie Plus selection, and bus timing works like a perfectly controlled process?
I'm going to go with the latter.
Yeah.
Either one will
Good
ever
choice.
happen. But oh, wait a minute.
True.
I'm sorry. Our clients are awesome, but nothing ever goes perfect. But the Disney stuff. Oh my gosh, because you're dealing with so many people.
When you throw in the bus routes, I'll tell you what, the best Disney vacations are when you're staying on property and you hit every bus. You get in line and that bus shows up and you get on the bus the first time and you don't waste a lot of time, waiting. So that's
You don't rent a car?
We can talk about Disney strategy offline.
Okay. Yeah, we rent cars.
It has morphed
so we just
over the
drive.
years.
I have so many COVID era stories about trying to beat the lines and beat the crowd. It gets pretty interesting. But Jeremy, thank you so much. This has been great. We've really enjoyed having you. Sara, do you want to go through the podcast? Email? I'm sorry.
What are you talking about, dude? We're on the podcast.
This is the close. This is where we wing it.
Yes. All right. Well, thank you. And like Jeff said, thank you so much, Jeremy. If you want to reach out to him, his email is jeremys@cckcpa.com. Yep. All right. And then
J Smith.
Oh, is it J Smith? Okay, we switched it around.
So interesting question. Is that happening inside the firm? We're like changing from Jeff at CCK to Sara. Okay.
But I mean, we'll stay the same because we're old.
We're old.
Yes. Okay, so it's jsmith@cckcpa.com. If you guys have any questions around employee benefit plans, he is your man. If you have any other comments or questions for us, you can email us at podcast@cckcpa.com. And please just email us so we know that you like us because we have complex. We really want to know.
We want to know there's people out there. And so I'm going to open this up. If you think you have better Disney strategy than the combination of Jeremy and Jeff, then bring it on.
Bring it. Yes. Email
that'd
us.
be a fun topic.
For real. But as always, a huge thanks to CCK for allowing us this platform so that we can share all of these amazing, wonderful guests with you. Thank you to Christy Porter for being our guiding light in every single podcast. Thank you to my amazing husband, Robert Mays, for the intro and outro music. Thank you to Clarence at Tulsa Internet Marketing Services for always giving us the perfect edits and the amazing comments back and feedback. And most especially, thank you to Emily and Dasha here in our offices for just keeping us straight and scheduled and making sure we're in a comfy, cozy space every single week.
They are very important individuals.
Yes.
Again, thank you very much, Jeremy, for joining us. And we hope you join us next time as these two CPAs get together to have a chat and you get to find out who's on the mic.
The information provided on this podcast is for general informational and educational purposes only and does not constitute accounting, tax, legal, or financial advice. While we strive to provide accurate and up-to-date information, laws and regulations change and individual circumstances vary. Always consult with a qualified CPA or professional advisor before making any financial or business decisions. The views expressed by the hosts and guests are their own and do not necessarily reflect the opinions of any organizations they are affiliated with. Listening to this podcast does not create a client-accountant relationship. By listening to this podcast, you acknowledge and agree to those terms. And that's a wrap for this episode of Two CPAs and the Mic. If you found today's episode helpful, please subscribe, share, and leave us a review. Have questions or ideas for a topic? Reach out. We'd love to hear from you. Email us at podcast@cckcpa.com.